Yeah, why don't we just kick it off? We can do a round of introductions. Maybe JD, you can go first, and then we can go Haseeb, Oliver, Andrew, and then we could have John close it off, and then we could start out with questions. So, JD, would you like to introduce yourself?
Yeah, sure. Thanks, Ben. Hey, everybody. JD here from BenQi, one of the founding members of the BenQi platform. Worked on a few other projects in the space, and just really excited to be here to chat about the experience we've had so far, what we're looking to do in the near, medium, and long-term future, and hopefully take some questions and answer anything that you guys have on your mind. So thanks a ton for the invite, guys. Looking forward to having a good chat.
Cool. So I'm Haseeb Qureshi. I'm a managing partner at Dragonfly Capital. We're a global crypto fund, and we recently backed Benky, which I'm really excited to be on here with.
Yeah, and also I'm Oliver, the managing partner at Ascensive Assets. We're a small to mid-sized private investment firm, mainly focusing on the DeFi and sort of NFT. Was lucky industry and was lucky enough to JD was sort of allowed me to come into the round, and here we all are.
Hey guys, this is Andrew, managing partner of Mechanism Capital. We're a crypto fund that is active trading the secondary markets, but also very active in the venture side of the space. And we're excited to be investors at BenQi.
Excellent. I am John Wu, president of Ava Labs, the team behind the Avalanche protocol. And it's a super exciting time to be here on this call, but as well for the ecosystem of Avalanche. There are a ton of projects now deploying or experimenting on Avalanche. There's 50 live projects. I would think about 35 of them are dApps. And then there's a pipeline of 150 that's either implementing or will be deploying in the next month and a half or so. So it's an ecosystem where the building blocks are really starting to form, everything from AMMs to lending, which we'll talk a lot about, yield farming, aggregators, trading platforms, options, synthetics, insurance, you name it. So tons of stuff is happening on the Avalanche platform. And the foundation of Avalanche is it's going to increase their support for a lot of these great projects in various ways, not just in the form of investments or grants, but also from a marketing community perspective, from there's now IDO platforms there for grants and other stuff for development costs or security audits. Then, eventually we're going to be ready to start providing liquidity. And obviously, technology is also very important. There are people on the Avalanche Foundation side ready to help projects integrate and work on the platform. So it's a super exciting time, and I'm really happy to be here with this group of people. All thanks to JD, actually. JD's project, Benky, is one of the lending projects, an unbelievable project. And I was hoping JD can kick us off here today by talking about a little bit about what his project is for the audience. Obviously, everyone here on the panel knows, but also why he chose Avalanche.
Hey, thanks a lot, John. What a humbling introduction from most of the guys that only months ago we were figuring out how on earth we were going to get them interested in our project. So thank you guys very much for asking to have us here, for supporting us, and looking forward now to sharing a little bit more information with the community. So, there's a few things that made us interested in launching Benky. And before I get into that, Avalanche, all of the founders of this venture are avid Avalanche supporters. And, most of us have been in the space excited about building for, participating in DeFi since the inception of DeFi, really. Most of us have been around on our team in the space fairly consistently since 2015-16 in different capacities. And, as Avalanche came about, we were very excited about the technological opportunity that the blockchain provides. And of course, we're early supporters and participants in the ecosystem. And so soon after Avalanche did their own fundraise and so on, we were early supporters and investors, and we started thinking, okay, how can we participate in the ecosystem in a meaningful way? And we've attempted to do that in a few ways, I think successfully. One of those was the relationship that we were able to establish with Ava Labs and the surrounding team. And so we have a couple of other products that will be coming out at some point in the future that we've been heavily supported from the Avalanche team, from introductions and technological supports and different things. And when we were building or considering building BenQi, the support and the interest and just the dialogue that was established with the Avalanche and Ava Labs team was a very motivating factor, I think, in allowing us to pursue the ideas that we had and eventually turn into BenQi, and here we are. I think it's not just from a financial capacity that the support that Eric and John and the rest of the team have provided. I mean, we've had Jay support us with marketing and co-marketing and conceptual ideation. How do we build narrative around this idea or that idea? From a technical standpoint, the technical team has been critical in helping us with connections to integrations we need, understanding certain pieces of the consensus where needed, understanding some of the technical capabilities of the subnets, although they're not entirely released for our use, of course, for the next while. But there was just so many different areas of support. It really, it was really encouraging to see, how hands-on your group was when we were looking at building out BenQi on Avalanche. So thank you for that, John and team. I'm not sure who else is here. I know Jay's here, Eric, and whoever else. So that was a big piece. And I think to answer your other question, John, quickly, a high level of BenQi, why on Avalanche? I think the obvious answer to that question, or at least the basic answer to that question, is Avalanche has a very explosive potential from a DeFi perspective in the short to medium term. And, being involved in the ecosystem, it was obvious that one of the major tenets of a successful DeFi ecosystem, of course, is liquidity markets, lending protocols, and money markets. And so we said, okay, how can we support DeFi from a lending perspective? And if we do so, how does this tap into our broader vision of really making a disruptive and transformational type product in the ecosystem? And so that's kind of how it started. So our initial iteration, of course, as you mentioned, is intended to be that foundational kind of backstop piece for which DeFi can be built on and around in Avalanche. And so, for people just learning about BenQi, that's probably the easiest way to understand kind of the first step of the protocol is really to just allow for liquidity of different assets, allow for idle assets that may be sitting outside or inside the ecosystem as it evolves, to give them a home and put them to work. And of course, one of the supplemental opportunities or assets that a platform like BenQi provides is integrations with other DeFi protocols that require certain levels of liquidity. And that's been another thing that's been humbling and exciting since we started this journey, was really just all of the great teams that we've been able to meet and integrations that we're working on. And it's very exciting to see what's about to happen inside of Avalanche in the next weeks to months.
Thanks, JD. That's a great summary, and we're very excited to be working with you. And I think you bring up some really strong points where Avalanche, the foundation, and the Ava Lab teams are working really, really hard not to just be your classic grant or ecosystem money supplier, so to speak. We really want to help projects launch properly. And I don't know what you call it. It's a combination of, I guess, being an accelerator as well as an incubator, but the purpose is to treat them as a partner and help them really grow with whatever they need to really make it thrive. And that only benefits every other project on the ecosystem. And since a lot of these projects now are getting to this, what I call liftoff position in their stage of maturation, as well as the ecosystem of Avalanche is also achieving that liftoff, it's important that we all work as partners and help each other. And there are other people on this call, like Haseeb, I've known for a long time, and that's kind of what Dragonfly has done from a VC perspective for their investments. Haseeb, maybe you can talk a little bit of how you guys help out your investments.
Absolutely. So, as investors, obviously, being a VC as opposed to being being on behalf of a protocol or a foundation, it's a somewhat different relationship you end up having with some of the projects you work with. But for us, what we try to do is be both a sounding board and an advisor when it comes to things like token economics or protocol design. We also try to help with go-to-market, thinking through how to attack different geographies, connecting some of our portfolio companies with auditors, help with hiring, help with marketing, getting PR out. So all sorts of different things that different portfolio companies need at given times. And so when we decided to team up with BenQi and get involved, we were really excited to see how we could help out with the project that these guys are launching.
That's really amazing, Haseeb. Yeah, I actually have seen you guys in action, just helping out with other portfolio companies, and Oliver and Andrew would also love to know how you guys have been engaging with different portfolio companies, and just kind of your guys' stance on where the DeFi I don't know, multi-chain ecosystem is headed.
Yeah. So I guess from our side, more on sort of portfolio companies, we kind of figured out early that we can't provide everything that any portfolio company we have needs, right? I think there's a sort of in the VC world, there's a lot of egos that jump around, right? And you see sort of the general same people on all the sort of cap tables. So for us, when we're investing in anything now, first we want to know that sort of the founder has the ability to pivot and take advice from their investors, which JD and his team have sort of nailed that straight out the gate. I came into BenQi a little bit late, but as soon as we sort of saw the people that was looking to come in, we wanted to dive in straight away. Obviously, Haseeb was, JD told me he was having a conversation with Haseeb the very next day. For us, that was, okay, that's brilliant. Dragonfly are like the gateway between sort of the US and China. We know their value add. Andrew was on an ongoing conversation at the time. Was like, okay, Andrew's the sort of liquidity king and strategy and anything around sort of the DeFi industry. So for us, it was more about like our thesis, I guess, is based around cap tables and knowing, okay, what we can't add, we know other people in this industry can add, and then not just a sort of logo on a website, etc. So that's sort of our starting point before anything. But yeah, in terms of sort of where the DeFi industry is going, it grows so fast that it's really hard to tell. I'm kind of more happy that we don't know. I think that keeps everybody on their toes. But yeah, I guess I'll pass this one over to Andrew. He's the DeFi expert among all of us, that's for sure.
Cool. Appreciate it, Oliver. Yeah, so I mean, at Mechanism, we work with a lot of portfolio companies, and we generally see that a lot of them go through the same processes, and they have the same needs. So Mark on our team, who heads up portfolio development, he's built up relationships with a lot of the what we find to be really helpful service providers and high quality ones that support these portfolio companies in terms of marketing across different regions. So you have different ones across China versus in the West. Help with PR, to help with various other needs, and kind of where our expertise comes in is we were kind of really early in a lot of the early DeFi communities, and so we've kind of seen what's worked really well in terms of mechanism design and what's worked not so well, and kind of thinking about how liquidity moves is something that we've done quite a bit, and so we've built up some game plans around how to optimally design liquidity mining programs, which what we would consider most DeFi protocols really need to kind of bootstrap their initial network effects. And besides that, we're also pretty active traders in the space. So we'll put a lot of volume through both centralized exchanges and decentralized exchanges, and we're active lenders and borrowers. So working with a protocol like BenQi is kind of a natural fit for us.
I think that's a great point. JD has done such a good job of, his round was in the 6 million was so oversubscribed, but he really put together a group of supporters that have disparate skill sets that can provide, the best in something, whether it's, helping them find liquidity, or in our case, being the strategic venture type person, or Haseeb, the gateway. So really kudos to JD for putting together in a very oversubscribed round the right partners, if you will. Andrew, I love one of your pinned tweets, which is your obsession with finding the next gem instead of betting on clear winners with traction and accelerating growth. The reason why I love that is because before I became an operator in the blockchain space, I was a tech investor at various funds. And I think one of the most fun parts of being an investor is going out on that treasure hunt and finding that gem, if you will. But now in this seat, where it's more like Google Ventures, or like the old days, or Cisco Ventures, I actually we try to think more in terms of how we accelerate, how we incubate, how we support various things. So I'm curious, and this could be not just for Andrew, how do you go about finding that next gem, and how do you know? Whereas it's almost easier for us. Yes, we meet JD, he's great experience, product's fantastic, we do a lot of tech due diligence, and we brainstorm how we can help a Benky. It makes it easy for us to decide. How do you decide?
Yeah, so it's a good question. And I would say, I guess finding gems is probably a lot more relevant in bear markets, where, people are not so willing to allocate capital, versus bull markets when people are a lot more indiscriminate about the projects that they invest in. And so, pretty much every project that is, of decent quality is going to be able to find capital in this space. But generally, in terms of our investments, what we look for is it sounds simple, but the product market fit, and just kind of coming from our perspective as crypto native, DeFi native users in this space. We trade, and we kind of use these various financial instruments on a day-to-day basis. So we can kind of use that lens as traders to say this is something that other speculators in this space really need, because that's kind of where the vast majority of usage in crypto is coming from today, is via essentially financial speculation, right? So if it really kind of passes that test of would I use this as a trader, or would I use this as, say, another DeFi protocol, right? If it's some infrastructure that Adapt could use, then that's really important as well.
Do you think that there's just right now, for every single burgeoning blockchain out there, an opportunity for them to just start as the AMM and as the IDO platform for that specific vertical as a blockchain? Or do you think that there's a bigger appetite for these Ethereum first DeFi dApps that are trying to expand into a multi-chain strategy?
That's a good question. I mean, if you just look today at what the landscape is of Ethereum-based or originally Ethereum-based DeFi protocols that have moved multi-chain. As far as I know, actually Andrew probably has better color on this than I do, but as far as I know, Sushi has expanded to a bunch of blockchains, but they're not really gaining a lot of traction beyond what they have on Ethereum. To me, I mean, we've seen things like 1inch or Dodo become very successful in their sort of multi-chain environment. And I think a large part of what explains that to my mind is just focus. It's just very, very hard to out-execute somebody who is single-mindedly focused on solving that specific problem compared to somebody who is, just kind of spreading their bets very thin. And I think if you're somebody like a Uniswap, and you have enormous amount of motivated and enormous amount of motivated users and a tremendous amount of brand value, like there's so many people go to Uniswap.exchange, then it's very easy for you to redirect your user base somewhere else. But most people don't have that. Most protocols don't have that. SushiSwap probably has something like, between 5 and 10%, probably closer to 5 of the active user base that Uniswap has, which tells you that okay, if you take a much smaller user base and you start spreading it out between a bunch of different ecosystems, pretty soon it's so diluted that it doesn't actually give you that much of an edge over somebody like JD who's single-mindedly building for a single ecosystem and can actually focus on that ecosystem in targeting users, in building BD relationships, in doing partnerships, in just spending time catering what they're building to the ecosystem that is forming around this thing. And then of course there's also the fact that the token ownership of that protocol actually happens on this chain and primarily to the users of this chain. Whereas for something like Sushi, to the extent that they can offer cross-chain liquidity mining, it's just going to end up being a smaller effect than, because of the fact that most of their tokens live on a different chain. So Andrew, I don't know if you have a different perspective here.
Go ahead, Andrew.
Yeah, no, I was going to say brand value is definitely really important. You can see that kind of in the distinction between Sushi and Uni, in the sense that Sushi has liquidity mining incentives, right? And right now, Uni really doesn't. But still, people choose to provide liquidity to Uniswap because either they're more comfortable with it, or they don't know Sushi at all, or because they feel like they can get more trading fees that way because they feel like other people might trade on Uniswap more. And I will say that, brand value matters, but it's also not the end all be all. So, if you look at kind of what SushiSwap did cross chain on Binance Smart Chain, they moved there as well. They launched on, I think, like 4 or 5 different chains, but I don't think they got too much liquidity on like anything besides Ethereum at first, just because on the other chains they launched on, like Binance Smart Chain, you had PancakeSwap and you had Bakery Swap and all these other AMMs, doling out really, generous liquidity mining incentives. And so really, the people that were on Binance Smart Chain, they're a different like user segment as well. So there wasn't that brand association. And then, also they're getting significantly more rewards, providing liquidity to these other protocols. And, at that, and there's also kind of that barrier of like network effects that you have to build up as well, right? Because these other platforms people are trading on every single day, whereas for SushiSwap on Binance Smart Chain, there's really just not much activity at all. So I think if projects are moving to other chains, implementing a liquidity mining program is pretty important at first.
It's very important.
If I can,
oh yeah, please, JD.
If I can jump in with just kind of our perspective on, on the opportunity within Avalanche, and this isn't an exact apples to apples comparison, of course, but Haseeb mentioned earlier, the Uber in the United States, and it's not necessarily going to be the Uber in China, but there might be a variant that launches in China that's more catered to the Chinese community or the laws and regulations or whatever. It's kind of, I believe the future of DeFi may and will most likely include some large participants that find a way to become the equivalent of a global brand in retail or other consumer environments in blockchain, where you might be a multi-chain type brand. And there's some advantages, as mentioned, that Uniswap might have in terms of, just brand loyalty, evangelism. There's been some long time participants of the Uniswap ecosystem that they might have some opportunities down the road to expand to other chains, and it'll be exciting to see what they end up doing. From our perspective, we were fortunate enough to have, especially in this kind of, there's so much transparency and availability of information, and us being users of DeFi for so long, and users of blockchain and crypto for so long, we were able to take a look at the landscape in a way that the Uniswaps of the world didn't have the opportunity to, and to say, okay, what's working on different chains, what's working well from a technology standpoint, what maybe isn't working, where can we make things slightly better. And we had a little bit of time to work with the teams with the sole focus of Ava Labs and some of the other partners that you'll see emerge with BenQi in the very near future. And we had time to really kind of iterate on what's working well elsewhere and saying, okay, we're huge Avalanche proponents. Now we can take the things that have worked well there with somewhat of a clean slate. We don't have path dependency on certain governance programs. We don't have path dependency on previous liquidity mining or previous token structure or previous investors. And we had a clean slate. So it really did give us an opportunity, I think, that although an argument could be made, a Uniswap, or even in this particular case, a SushiSwap, has some brand recognition and loyalty. We had an advantage that they just couldn't, and that was somewhat of a clean slate and an opportunity to forge new partnerships with new relationships, new venture relationships. The guys on this call have been in no small part responsible for the awareness of BenQi at this point, and we've had some amazing conversations with each of the funds and each of our partners on this call and the others that really have made BenQi exponentially better positioned to be successful on Avalanche. So there's from our perspective, DeFi is still so new, and the technologies and the blockchains are still so new that it's exciting to see what will emerge. But for us, it was really being able to be at the beginning stages of a growing industry on Avalanche that we think gave us a bit of an advantage. We had time and space and support to be able to do that the right way.
And the concept of brand has been mentioned now a couple of times. And frankly, I think that's a very good point. Whereas just about 6-7 months ago, I wasn't sure what the value of brand was in this space. And what I mean by that is, we saw what SushiSwap did in September, October to Uni. And then it seemed like, the concept of a customer acquisition and how easy it is for customers to go from one place to another made it very hard for stickiness and brand. But I think with excellence and over time, certain DeFi projects have, obviously in Uni and Sushi's case, and in certain chains, they have now established a lot of volume and TVL, so therefore they've established that brand through that excellence. But there also is brand behind trust that these guys will figure out, will continue to innovate and continue to be on the cutting edge, because that is one thing that can promote stickiness of customers. If people think that project is going to continue to create new features, new things, and to innovate in that way, they will keep staying on that platform or that project. So I don't know, Oliver, do you have agreement with that in terms of how brand is being created in this space?
Yeah, I think so much since 2017, where everyone on sort of the retail level used to sort of chase whatever big VC was invested in XY project or whatever. Now that just doesn't happen, really. It's still there somewhat, but the sort of retail side of the industry is now kind of moved separate from sort of chasing the VC thing, and it's sort of they just go wherever they're generally treated best. And a lot of projects, they don't sort of look after the community they've originally built, and then that community just disappears to somewhere else. And sort of, I think Uniswap and the Sushi Swap sort of distances there is that, you know, Uniswap basically just airdropped and gave everybody loads of free money, right? You know, they're more public, you know, they're more sort of active online. Sushi's sort of not, to me anyway. And I think that's why people sort of haven't gone over, even if the better alpha is over at Sushi. So yeah, community branding is king for sure. And founders kind of they don't just build up a community first and then get the community to follow them. They sort of build up the community, forget about the community, and focus on expanding it too fast, which then sort of goes back to the loyalty side of things. Because yeah, the community will follow you wherever you go, and you know, if you make mistakes, they don't just leave if you've been loyal to them. You know, they back you, they help you, or whatever. I think that's also part of like founders now being more active on social media, engaging with a community, as in sort of back in 2017, 18, it wasn't. It was like, you know, community didn't have access to the founders. A lot of founders grew an ego too fast because they raised insane amounts of money, etc. Now that's not the case, and I think that's definitely like a big thing for the industry in general.
Definitely. Haseeb, did you have something to say?
Yeah, I was just going to add one small thing is that, you know, another reason why it's possible for a focused project to win out on a particular platform, the way that, you know, for example, look at look at the, you know, obviously there's Pangolin on Avalanche, there's Pancake Swap on Binance Smart Chain, there's what is it, AnySwap on Polygon. Like the reason
QuickSwap?
why these dedicated, or sorry, QuickSwap, not AnySwap, QuickSwap. The reason why I think these dedicated AMMs are able to really win is also because via their token distribution, they're able to get an ecosystem of supporters who are really invested in their particular token and making that thing successful. And as Andrew mentioned, one of the key drivers of the growth of crypto projects is their ability to activate, excite, and to motivate a small group of token holders who are aligned with the interest of making this thing really successful. So along with just, you know, for example, the users who hold Ava or Avox and are actually motivated to use projects on Avox for that reason, is that, look, this is a chain that I have skin in the game on. I believe in this thing and I'm seeing it grow in front of my own eyes. But then at the same time, like, okay, great, now I've got skin in the game in this very particular project, which if it is a Uniswap or a Sushi Swap that is porting over to another chain, you don't really have that per se. It's purely, you know, do you bring the user base and do you bring the trading volume? If you don't, then the real thing that's going to build momentum and get that adoption flywheel going is going to be to have a motivated user base of token holders.
See, that's a absolutely great point. And if you look at, I don't know, way back Linux, which is open source, they didn't have that incentive mechanism. It took a long time for them to get to where they are. If you look at Wikipedia, ultimately it's an open source, you know, encyclopedia online. It got to where they were. But in the early days, there was a Microsoft version of it, centralized, controlled by Microsoft. And I forget the name of that equivalent of Wikipedia, but that was a far stronger early reference place online than Wikipedia, but ultimately Wikipedia won out. So without that incentive mechanism, it's hard to get that traction in a short period of time, which is one of the beautiful things about the business model of a lot of blockchains and crypto companies. But we're in an extraordinary time right now where kind of like success is begetting success, because that community you talked about that have inherent interest and motivation to use the dApps on the ecosystem, or even use dApps more and more because they got in early. What happens, and everyone in the top here I know have either in this current position or previously gone through winter, so to speak. So this is for either Haseeb, Oliver, or Andrew. What happens when we go through the next winter? Does this incentive mechanism fall on top of itself?
I mean, so first, we haven't really seen a post DeFi summer. We haven't really seen a true winter quite yet. But what I would say is that, tokens kind of play into this. Well, so there's a universe of how to think about different kinds of tokens, and tokens sort of span from being a core integrated part of a technology or a product, but they span all the way to going into, call it, religion, right? So like on one side you have something like BenQi, or an AMM or whatever that has a native governance token. All the way on the religion side, you have something like a Dogecoin, where there's this token is somehow like a way for people to loosely coordinate on a vague idea, or not necessarily vague, but an abstract idea, call it, to the extent that it almost is entirely a coordination game. And a well-designed token that is integrated well into a product ends up being something in between those two, where you have all these people rowing in the same direction because they have made money. They've used this product. They've seen it grow. They have this emotional connection to the ecosystem and the community that they've become a part of. I think the more that you're able to engage those users, make them believe in a roadmap, show them that things are changing and evolving, and give them a path to saying, like, look, okay, So I mean, many of the communities in crypto that are formed by people who made money together, which sounds almost dismissive or cynical, but that does really describe a huge amount of the people who are part of the Bitcoin community. They got in very early, and everybody's made money together. And if Bitcoin goes down to 30K or 20K, it's going to be unfortunate. But most of those people, their cost base is much lower than that, and so they're like, look, I'm along for the ride, and I believe in this thing in the long run. And the thing that buoys them in a time when markets are cloudier than they look today is going to be seeing that technological roadmap. I remember in 2018 when Bitcoin was nosediving and everything in the space was just absolutely cratering. I remember what people were talking a lot about. They were talking a lot about Lightning. They were talking a lot about what was the thing that just got integrated into Taproot, Schnorr signatures, all this stuff that gives people a clear reason to stay a part of the technological journey, is they see that there's a place we're all going. And if you don't have that, then I think, without a motivated team and a clear technological roadmap, that's when I think it's very difficult for people to stay on board and to be motivated to continue cultivating that community when there's a market downturn.
Yeah, that's a very good point. I think, on that scale of utility, in the case of a BenQi versus religion in the case of Doge, I don't know if religion's the right word, but I guess when your CMO is Elon Musk, anything is possible, and I have the highest respect for him. But I think what's interesting with BenQi in terms of roadmap, another thing you talked about is BenQi talks about scaling finance for all. So right now it is DeFi for them, but they talk about bridging TradFi with DeFi at some point. So even when they go through the DeFi landscape, there's a long roadmap for them to continue to succeed and bring the skills and the tools and the products they develop in this DeFi world to the TradFi world. JD, maybe you can talk a little bit about that and how you see the long run for BenQi.
Yeah, I think Andrew made some great points that I just wanted to touch on quickly with respect to kind of what happens in the quote unquote crypto winter. Cool. And I think a lot of the things that we see now as predominant or very exciting industry participants and projects, and even in the top 30, 40, a lot of those projects, the greatest amount of development progress was made during 19 and 20, 18, 19, 20. And those are really the projects that seemed to come out that had a focus on continued development, continued community engagement. What is really the end result? What are they building towards? And that's how you get, in my opinion, your true evangelists. I mean, you start a community during bull times when everybody's making money and everybody's happy. And where you really solidify your community is what happens when, the markets are going down. And what are you doing? What is your team doing when, everybody's not rolling in the money printer? That's, I think, where you really solidify communities and solidify projects. And you have to have a robust and long-term vision in order to continue to build and continue to connect with people through those environments. So in terms of bringing DeFi to the masses, there's actually kind of multiple parallel meanings to that. And the first one really, and I think this is somewhat obvious to most people that look at a lending protocol on a low cost, super fast, super efficient blockchain like Avalanche. And that is really, we can do with BenQi on Avalanche what, unfortunately most other protocols in the current environment can't do on Ethereum and in some cases on other blockchains. And, we can offer the opportunity for wallets of any size to participate in DeFi lending and borrowing activities. And coming from a traditional finance background myself, I mean, obviously portfolio management is very important. And one of the tenets of portfolio management is collateral and liquidity and being able to use your asset base in different ways. And unfortunately, up until just recently, the only people that could participate in liquidity mining and proper liquidity mining and proper lending protocols, you had to have a certain asset size because the transaction fees were just so darn high. I mean, if it's costing $500 on the way in and $500 on the way out, I'm exaggerating the point, of course. I mean, you're eating up an entire year's worth of yield just to participate, which of course is a massive barrier to entry. So the first and probably most obvious way to fulfill our vision of bringing DeFi to the masses is, just opening up the opportunity to a different and a more expansive demographic of participant for lending protocols. And that's generally due to the transaction nature of Avalanche. And so that's kind of the first iteration. And the second one, of course, is really focusing in the short term on creating or at least working with other participants in the Avalanche ecosystem and the Avalanche team to create the infrastructure in and around Avalanche to make it a lot more user-friendly to come from, say, a relatively ignorant retail perspective, new entrants into crypto and blockchain. And how do we actually get in and participate? And how do we participate in lending protocols on Avalanche? That's a challenge. And that's obviously something that we're all working diligently towards, all of the people on this call, is trying to find a way to make the friction for new entrants, very intelligent entrants, into a space that can seem disjointed and can seem complex and can seem confusing. And so we embody that in our user interface, the user experience that we've built, which you'll see very shortly, is different than what most people have experienced in other lending protocols. And it's really focused on user flow and ease of use, simplicity of information. That's something that Uniswap and many of these other platforms in the DeFi space really did well, was made it relatively simple and very kind of easy to flow for a new entrant in a very confusing space, but to use their protocols. And our intention is to do the same. So to help build the infrastructure in and around with all of the other DeFi project leadership teams, as well as Ava Labs, to build that infrastructure, making the barriers to entry increasingly less. And then once we have people in the ecosystem, keeping the costs low, the user flow, the user experience at the forefront in terms of making it easy and accessible for people to participate in DeFi. And then, of course, we have kind of the more medium to long-term vision of connecting DeFi and TradFi. And traditional finance, I mean, I left the traditional finance space after a long time in different areas. And part of the challenges that TradFi has is a lot of bureaucracy, a lot of intermediaries. It's archaic, it's slow, it's expensive. But there's still a need globally for a consolidated financial ecosystem, or at least a parallel financial ecosystem where DeFi kind of starts to branch out into, the real world, everyday use of finance for the populations globally. And I kind of joke about this, and this is a long-winded answer. I apologize, but I joke about this that we at first there's a lot of people saying, when is J.P. Morgan and Citi and those guys coming in and building a lending protocol? And our thought is it's actually quite the opposite. What we expect to see is projects building critical mass inside of blockchain and inside of DeFi, and building flourishing liquidity environments, and then finding ways to connect or tap into traditional finance and navigate the compliance and regulatory kind of hurdles, and find ways to connect so that people that participate both in traditional finance and DeFi can do so with relative ease, and can do so without overwhelming obstacles to participation. And so the subnet infrastructure on Avalanche was especially appealing. And one of the other major reasons that we were excited to build on Avalanche is our grander vision is to be able to create an environment where your blockchain and crypto assets and your fiat assets and fiat activities do not need to be mutually exclusive. And as portfolios in crypto and in blockchain become larger components of people's personal financial situations, we want to find ways to allow them to work together. And so the subnets on Avalanche, what's beautiful about the subnet infrastructure and the validation network is you can do that in a KYC and AML compliant fashion. And so that was a huge advantage from our perspective when figuring out how to build the framework to connect from a regulatory perspective to traditional finance, and to make sure that they can connect with us in a compliant way, that we also had the underlying infrastructure to be able to do that. And Avalanche obviously provides that opportunity.
That's right. Thanks, JD. I would love to go into more about subnets. Anyone can follow me and DM me on Twitter, and we can talk more about that. But we only have 5 or 6 minutes left, and I know there's a lot of questions. Who JD you know well, and Eric, go at it with your questions.
I actually got a lot of my questions answered on this call. It's great to have you, JD, along with everyone else here. So I guess my one remaining question for you is, there's a lot of other projects in the Avalanche ecosystem, and a lot more to come after all the kind of the building blocks are in place. What are, I guess, without mentioning any names, maybe what are some that you're interested in working with?
Yeah, great questions, Eric. I mean, obviously, we're given the fact that we're going to be a foundational piece in terms of offering opportunity for investors to utilize what may be otherwise idle assets, or assets on Avalanche. Obviously, we're always open to new assets on the platform. What types of stable coins or algo coins or different things. We're working on some interesting partnerships there. Of course, there's a lot of other kind of supplemental lending platforms, insurance platforms. There's under collateralized lending platforms. There's there's many projects that are evolving. I'm trying not to be too descriptive of some of the partnerships that are budding here, but there's a lot of things that require or that really benefit greatly from tapping into other liquidity sources, and we're definitely very open to integrations and looking at creative new ways to. Again, I mean, we're not necessarily going to create all things on Avalanche. We're going to flourish as an ecosystem through collaboration and partnerships. And so I can't see too many reasons why new projects wouldn't reach out and say, hey, here's what we're working on. Is there a way for us to collaborate? Is there an opportunity? Is there a need? And how can we really offer more inside of Avalanche for the participants in DeFi? So I wouldn't say there's any one particular area, but moreover, I think there's almost every area where collaborations and partnerships really could lead to unbelievable results.
Amazing. Great. So I have one last question and then I think we'll wrap it up. So in the investor community, right, I've heard a lot of people saying, hey, it's Solana season. And I'm wondering, when do we know if it's Avalanche season or is it Avalanche season already? So maybe everyone can just go around and say maybe like 30 seconds of their thoughts and how we can measure when investor interest is kind of going into different pockets of ecosystem like Avalanche.
So maybe I'll start. And wow, tough question there, huh, Min? But I think Avalanche season is just about to really get going. There's some big announcements formalizing some partnerships from other venture capitalist firms, as well as solidifying certain funds and grant programs that will be announced very, very shortly.
I would definitely echo that. I think to the extent that you see what's going on with Solana, a lot of that is price action and not necessarily adoption. And I think the thing that really brings adoption is having a robust ecosystem, being able to having projects being able to seamlessly move, having all the requisite pieces of the ecosystem, and those are just now starting to really fall into place, I think, for Avalanche. So that's why I like John, I'm very eager to see what happens over the next few months.
I would have to echo what Haseeb said here. I'm clearly bullish and biased in my sentiment here, but I do believe, just given, again, the partnerships and conversations and what I do know from participation deeply in the ecosystem, there is a lot of very compelling technology, very compelling projects, amazing collaborations that are just about to kind of breach the surface on Avalanche. And I think what's, to build on Haseeb's point, I think the time is now for Avalanche to really explode as an ecosystem. And I think it's so functional as a blockchain. It's so functional right now that as soon as a couple of pieces are launched and we see that kind of community have the capability to really participate in a meaningful way, it's going to really be an amazing few months here ahead of us, I think. And a couple small infrastructure pieces, a couple of interesting launches coming up in the next very short term. And I think you're going to see some amazing things. I'm very, very excited.